Hi, everyone. Today, let's talk about retail sales. And then we'll get straight into the charts. And then we'll take a look at my results for the day and my positions going into tomorrow. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So retail sales fell 0.6%, and they were expected to fall 0.6%, so it fell twice as much as expectations. And then for weekly jobless claims, those declined by 20,000, again demonstrating that the economy is pretty strong. So we have a strong economy, but we do have falling demand in terms of consumers. And that really seemed to trigger a pretty big sell-off. I thought the market was going down today anyway, but this was just another catalyst that pushed the markets down even faster. They say the Fed surveys from New York and Philadelphia showed contraction in manufacturing, also signaling demand destruction and a weakening economy. They say consumers in November continued to pull back on their spending, and the decline was 0.6% versus the 0.3% expectations. They do caveat that this number is not adjusted for inflation, which did increase by 0.1% in retail sales this month. And they also mentioned that gas and auto sales were down by 0.2%. The pullback overall was pretty broad. It included most things, including furniture, building materials, garden centers, as well as vehicles and parts. Online sales also fell by 0.9%, while restaurants, food, and beverages rose by 0.9%, while bars and restaurants increased by 0.9%, and food and beverages rose by 0.8%. This seems fairly expected in my opinion. People are transitioning from buying stuff and moving out back into the economy. We're still kind of recovering from COVID, and this seems like a little bit of a natural transition in my opinion. Of course, the decreases are not good for the economy, and that does have investors scared. And at the same time, we have the labor market continuing to stay strong, encouraging the Fed to be just as hawkish as they have been going forward. Moving over to the S&P 500 on the 15-minute chart, you see yesterday where we were closing at 399 or so, 390.50, and then we gapped down. We didn't come close to filling that gap. And then we moved down really dramatically all the way down to 388 before bouncing a little bit up to 390 and then closing back down at 389.50. In terms of the MACD, this was kind of frustrating for me today. You can see we were moving down throughout the day all the way until here, but the MACD said that momentum was declining basically throughout the day, and we didn't really stall until we had about our fourth green bar on the MACD, and then we really rallied here into the midday. If you were trying to catch this at all, which I was a little bit, I didn't think we were going to have this much of a down move today. I thought we would move down a little bit, but this was really dramatic. Then you probably lost some money unless you were short the markets. And then here into the close, you can see RSI was picking up a little bit, still pretty choppy, and I wouldn't expect any kind of a relief rally, maybe back into this, probably just up to 392.50 or so, maybe even to the pre-market lows here at 393.90. Or 394 back into this zone, which would coincide with the 55 EMA on the 15-minute chart. Jumping over to the 1 hour, you can see the 9 EMA did catch up with price action, but that 21 EMA is still sitting pretty high. We have resistance still sitting at that 392.50 zone. It seems like we're going to come up and retest that just based on what it looks like. You can see the MACD here on the hourly chart is declining. MACD's been a little bit questionable here today, so I don't know how much trust you want to put into this. This certainly looks like it could continue to sell off, but it seems like the market needs just a little bit of a relief rally back up to that 392.50 zone. Similar story here on the NASDAQ, sold off throughout the day, did not see any bullish price action until the MACD turned green on the 15-minute chart. RSI ticking up here slightly. Jumping over to the 1 hour, similar to the S&Ps, we have momentum to the downside fading slightly. We do have support sitting down here at 275, which we did get pretty close to that today, and it did seem to act as some support. RSI still very oversold here on the hourly chart. And if we get any kind of selling action tomorrow on the 4 hour, you can see we're going to get oversold conditions. Momentum to the downside is still strong on the 4 hour, but it does seem like we're going to have some support in this area. Like I said, I don't think this is going to be a start of a rally or anything, probably just a relief rally. Probably back up into this 182, 181, 182 area. Maybe we get back up to 183.50. I doubt it. And then I would expect the sell-off to continue. Moving over to the Russell, not much to add here. Looks weaker than the other major indices, definitely affected more by retail sales. You could maybe argue that momentum is fading here, but it's very slow. RSI is still ticking to the downside, still oversold a little bit, but just can't imagine that this is going to stop anytime soon. You could maybe argue we retest this 178 zone, which would be the previous low here on the pre-market of 12 December, and then you would expect that to continue down. Moving over to IYT on the 4-hour, it's doing just about everything we had expected it to. Big red bar here today, did stall out in the midday, got a doji on the 4-hour. Momentum still building to the downside, and we are not oversold on the hourly. You would expect this to come down to that 144 EMA, in my opinion. We are sitting on support, but I just think we're going to pause here and then we'll get that continuation. Maybe a temporary relief rally, just like the other indices that we've been talking about. And then it seems likely we're going to come down to this 217 zone. Moving over to XLK, the technology sector. I know we've been talking about this one as one of the stronger sectors here recently, but XLK did sell off today with everything else. It did stop right at support, right at this 128.30 level. 129.30 level. Can't imagine that this is going to hold. Maybe we come up and retest 132 and then we get the continuation down. But I would expect that this is going to come back into this trend line or at least into this 144 EMA, which is still sitting about $3 below where we are now. If we do test the trend line, that's still sitting at 125. So a little bit more downward price action expected. Hopefully we get a little bit of a relief rally and then a continuation. Moving over to consumer staples, we finally got that breakdown that I've been talking about. We broke below both supports, came all the way down to just below 75, did bounce a little bit in the midday. You can argue we're going to retest resistance here that was previously support, and then we're still looking at this to come back into the 72, 72.50 zone. Moving over to XOP, surprisingly, we did not sell off today. It was a slightly bullish day for XOP. We finished at 137.50, did gap down, did fill the gap, and then closed slightly higher than the close yesterday. So there's still potential that this is going to come back into this 146 area. This does kind of look like a low and then a higher low now at this point. If we do get a little bit of a rally, I still expect this to fail in the 146 zone, which would be a potentially good short in my opinion. Moving over to the S&P 500 divided by the M2 money supply, you can see we are declining here, which means that money is flowing out of the stock market at this point. You can see momentum is increasing here to the downside on the daily chart. It's hard to set levels on this because it does work off the percentage scale, but you can see down in this 8% zone, which is minus 4% from where we are. That's where I would expect to see at least a little bit of support. We did stop at this previous high from 31 October. I don't think that's going to hold, but I do think we might get a little bit of a relief rally here, and then we get that continuation down back into this area right here, which would also coincide with the lows that we had here in July. Moving over to the dollar, as you would expect, it did rally throughout the day on the 4-hour. You can see we're gaining momentum. Although I will highlight here on the hourly chart, this does look like we might be topping here. Momentum is starting to fade on the hourly. We did get to overbought conditions here on the 11 o'clock candle, and we did sell off from that point. But then we came back in and found support at that 104.50 level, which we've been talking about multiple times. That was the low here on 8 December, and that seems to be some support here on 15 December. And if we get a continuation here, that's definitely going to be bad for the stock market. So this is something that I'm definitely watching. If the dollar does continue to move higher, that should spell lower prices for the stock market, at least in the short term. Moving over to J&K, you can see here momentum is starting to fade. We did sell off, gap down, could not fill the gap. And looking at the RSI, we did stop at the 50 level. If this does break below the 50 level, that's going to indicate lower prices. Wouldn't surprise me if we filled this gap in the morning tomorrow and then get the continuation to the downside. But this does seem like we're starting to roll over. You can clearly see that momentum all is starting to fade as well. Moving over to TLT, we were basically flat on the day. Did finish right at the high of day yesterday. And you can see the momentum to the downside is fading. That RSI is ticking up here slowly. We might have found some support, and this rally might still be intact. You could certainly argue that this is a little bit of a lower high and a consolidation pattern at this point. We still have not retested that 110 level, but there's certainly potential that this continues to tick to the upside here. In terms of structure, I did want to add a trend line here. You could certainly argue that this is still intact. We have the low, previous low here on 30 November, and then we tested that low several times. If this does break down, that would be an indicator that we're at least going to get that retrace, but so far it has not. Moving over to the VIX here on the 4-hour chart, you can see we ticked up throughout the day. Momentum to the upside is starting to gain. We did cross the 50 line here on the RSI, so that seems like we're going to continue higher here. Jumping over to the 1-hour chart, you can see momentum is fading here slightly. Would not surprise me if we came back down to this 22.20 level after this big red bar we had at the 13.10. We do get a tick down, retest this 14 level, and then we get a continuation higher. That would be my expectation here for the VIX, which should spell overall lower prices after a slight relief rally tomorrow. Moving over to my accounts, you can see I made just under $200 today. I was definitely more positive at one point today, and I should have made more money with my positions going into today. But I did try to day trade a little bit, and I lost a little bit of that money. Either way, still good to be up about $200 or 0.2% on the day when the NASDAQ was down over 3% today, and most of the major indices were down quite a bit. In terms of positions, I do have one put for tomorrow, which is in a slight profit here. I do expect that relief rally, and I don't plan to hold this throughout the day. Once we get that relief rally in the morning, we plan to take this position off, and then we'll see where the market's going, most likely to the downside, and I'll be looking to sell some short shares or some short calls to profit from that down move. Let me know down in the comments section how the day went for you, and if you think the market is going to bounce a little bit, or are we just going to continue straight down like we've been doing? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.